Hi, my name is Christian Waldegrave, Head of Research at Teekay, and this is our conventional tanker market update for April 2017. Now, looking at what happened to tanker rates in March, we saw a couple of things happening. Firstly, the VLCC rates came down quite a bit, but the mid-size rates, the Aframax and the Suezmax, actually found some support. And I think what happened is that on the VLCCs, we're really starting to see the impact of lower OPEC volumes. Compliance with OPEC production cuts is pretty high. OPEC is producing about 32 million barrels per day. And also those countries which are exempt from production cuts, that's Libya, Nigeria and Iran, those countries are also struggling to maintain production volumes. In fact, Libyan production was down about 0.2 million barrels per day last month compared to the start of the year because of some renewed fighting in the country there. And also Nigeria and Iran are struggling to raise their production volumes. So we've seen some low production from OPEC, and that really affects the VLCCs the most, especially out of the Middle East. What we have seen as a result of that is that Asian buyers have turned more to Atlantic supply in order to get their volumes because those Middle East volumes are lower. So we have seen an increase in movements from places like Latin America, West Africa, and even North America going long haul to Asia. Now, it's not been enough really to support VLCC rates, but it has given a little bit of support to the mid-sized sectors, particularly what's been happening out of the United States. I think we touched on this in earlier videos, in that US crude exports are really starting to ramp up now and are increasingly going to further afield places like Europe and to Asia. In fact, last month, US crude exports topped 1 million barrels per day. And China overtook Canada as the biggest importer of US crude, which is a very interesting development. So for the mid-sized ships, that's been a positive factor because it's largely Aframaxes and Suezmaxes doing these movements, or it's creating some Aframax demand by creating some lightering demand in the US Gulf, taking volumes and lightering up to a VLCC for export. And it's been good for the mid-sizes because that enables some extra triangulation in the Atlantic basin, and has allowed the Aframax and the Suezmaxes to achieve a little bit better than the VLCCs. As we go into the next few months, the summer months, I think what's going to happen is we're really going to see the impact of fleet growth having an effect on tanker rates. We've already seen a decent amount of fleet growth in the first quarter of the year. There's been something like 18 VLCCs, I think 14 Suezmaxes and 17 Aframaxes delivered in Q1. And only one ship from each sector has been scrapped. So we have seen a lot of ships coming into the fleet. For the Vs, I think that rate of fleet growth will slow down as we go through the year. But unfortunately in the mid-size, there are a lot of ships still to deliver through the course of 2017. There's something like 50 Suezmaxes still on the order book for this year, and 50 to 60 Aframaxes as well. And a lot of those are going to start delivering in between now and Q2, Q3, and before the end of the year. I think that's going to have an impact on rates in the mid-sized vessels. So as we go into Q2 and into Q3, which are normally seasonally weak parts of the year anyway, I think this higher fleet growth and the continued OPEC production cuts are going to have an impact, and we would expect that rates will probably be fairly weak through the summer months before having a seasonal uptick again in Q4 as we see every year. Going forward into 2018, at the start of the year, I think the market will still be trying to absorb all these ships that are going to be delivered in the next 6 to 12 months. And also, we do think that OPEC production cuts will continue through the rest of 2017. So I think 2018 is going to start off on a weak note as well. But we do think that it will start to turn around a bit during the second half of the year because that fleet growth really starts to come off as all the ships deliver. We think there's definitely some scope for increased scrapping. There really hasn't been any tanker scrapping for 2 or 3 years now, and so that fleet of older ships is starting to build. And as we look towards the end of the decade and new regulations coming in, like ballast water and the low sulfur from 2020, we think that probably some of those older ships are less likely to go through intermediate and special surveys, and we'll probably see an increase in scrapping. So the fleet side of things start to look a bit better as you get through 2018. And we also think the demand side will probably look better as well, because after a year of OPEC production cuts, when we get to 2018, especially probably as we get into the second half of the year, we think that the need for more oil, for more OPEC oil will be there. And so there's definitely scope there for OPEC to turn the taps on again, and then we'll get more cargoes at a time when fleet growth is falling. So we do think that the market will turn around a bit second half of 18, and really set up for what we think could be a very strong tanker market in 2019. One thing to keep an eye on though is for the tanker market to be really strong through 2019, we probably need new tanker orders to stay relatively low. We have seen just in the last month or two a bit of an uptick in new tanker ordering, particularly on the VLCCs. I think this year so far we've seen something like 15 to 18 new VLCC orders, which is about the same as we saw in the whole of 2016. So there's definitely, people looking at this market, probably at the bottom of the asset price cycle, and looking at it as an opportunity to order. And we would expect, people to order new ships at this point in the cycle, but hopefully there won't be an over-ordering of vessels such that it kind of kills the tanker market story towards the end of the decade. And we think that won't happen because there is still really a lack of financing available to a lot of owners. And shipyard capacity has also shrunk in the last 2 or 3 years as well, because shipyards haven't been taking very many orders. And we have seen some consolidation of yard capacity in places like Korea and China. So while we do think that some orders will get placed, we still think that overall tanker fleet growth will stay pretty low through 2019 and possibly into 2020 as well, at a time when the demand fundamentals start to improve, as I said previously. So we still hold that, we're going to go through a bit of a weak patch this year in the tanker market, probably into 2018 as well, but really starting to turn second half 18, and we have a very positive view on the tanker market as we get into the latter years of the decade. So that's our update on the conventional tanker market for April, and we'll talk to you again next month.